Welcome to this explainer, everyone. I gotta tell you, I am absolutely pumped about today's topic because we're exploring a concept from our sources that can literally change how we look at our financial futures. Today, we're unpacking the blueprint for building a completely stress-free, compounding wealth machine. We're stepping away from that daily grind of staring at stock charts, panicking over market dips, and instead, we're gonna look at how to build a robust financial engine that just quietly works in the background. Let's get right into it.
50,000 rupees. Let's just anchor our minds to that specific number for a second. We're looking at exactly how this sources suggest generating 50K a month in steady, predictable income. You see, a lot of people think the stock market is just this constant hustle of buying low and selling high. But if you look at the real wealth secrets of multimillionaires, they don't just rely on trading. They rely heavily on passive dividend income. They build these massive engines that produce cash whether they're working, sleeping, or literally on vacation.
So ask yourself this. What if you could pay your monthly rent, your EMIs? Actually, imagine paying your electricity bills using nothing but cash directly deposited into your bank account by India's absolute biggest companies. Imagine having that level of financial freedom. The stress of those monthly obligations just vanishes because massive corporations are essentially footing the bill for your lifestyle. In this explainer, we're breaking down the top 5 fundamentally unbreakable Indian stocks highlighted by the research that you can hold for the next 10 years to create this exact hands-free income stream.
All right, Section 1, the defensive moats, building the foundation. Let's jump in.
Okay, let's dive into this. To build this machine, the research makes it clear we need an unshakable foundation. We're building a 5-stock balanced portfolio, and our first category features businesses that are just incredibly difficult for competitors to disrupt. So the very first stock, highlighted as the absolute ultimate cash machine of the Indian market, is ITC Ltd. Now, love 'em or hate 'em, ITC is considered a foundational pillar for income investors, and taking a peek at their core business structure shows exactly why they're such a powerhouse for generating passive wealth. The core of ITC's dominance is its cigarette division, which the sources quite literally refer to as a legal printing press for money. They completely dominate the space, controlling over 70% of the organized domestic market. When a single company holds that much market share in a highly resilient consumer sector, it creates an economic moat that is almost impossible for any competitor to cross. And what's really fascinating is how ITC actually uses that dominance. Thanks to that 70% market share, they generate this massive, uninterrupted pool of cash. And they use it to fund their other fast-growing businesses, like those huge food brands and luxury hotel chains we all know. But here's the kicker for your 50,000 rupee goal. They historically reward their shareholders with a highly consistent 3% to 4% dividend yield. That is direct cash, flowing straight into your bank account, bringing us step-by-step closer to that target.
All right, let's move to the second defensive moat in our foundation. We're bringing Power Grid Corporation into the portfolio. If ITC is your consumer goods anchor, Power Grid is your unshakable infrastructure anchor. And this brilliantly illustrates what they do. Think of Power Grid as a structural toll booth on India's electricity highway. They aren't just participating in the power sector, they're the literal backbone of it. Power Grid transmits over 45% of all the power generated in the entire country. Just imagine that. Nearly half of all the electricity flowing through India has to pass right through their toll booth.
Because they are such a critical piece of national infrastructure, their returns are actually assured by government regulations. This creates rock-solid, incredibly predictable cash flow. And for you, the investor, that translates directly into a highly reliable 4.5% to 5% dividend yield every single year. You can start to see how these yields really stack up to help pay off those recurring monthly bills.
Section 2. Tech, cash, and energy giants fueling the portfolio.
With our foundation firmly set, let's move to the next interlocking building blocks of our blueprint. We're shifting our focus to fuel the growth and the yield of this whole passive income machine. Our third stock brings us into the technology space with TCS, Tata Consultancy Services. The tech sector is fascinating for passive income because their business model is fundamentally different from traditional manufacturing. Tech companies simply don't need heavy, expensive physical factories or massive infrastructure projects to expand their empires globally.
Because they are so asset-light, TCS just retains massive, and I mean massive, piles of cash. But rather than just sitting on it, TCS has this fantastic history of regularly returning that retained cash directly to retail portfolios. They do it through special dividends and premium buybacks. This is an absolute game changer for our strategy because it gives us that steady income to hit our 50K mark while also delivering high-quality equity compounding over the next decade. Let's pivot from the digital world back to the physical one for our fourth pick, Coal India. This is an absolute energy behemoth. Now, you might be thinking about the global push toward green initiatives, and hey, that's totally valid. But the reality on the ground today is that coal still fires more than 70% of India's electricity grids. It is the undeniable engine keeping the country's lights on.
The sources point out that Coal India operates as an absolute monopoly in this space. But what makes them truly exceptional as an income stock is their balance sheet. Get this, they operate with zero debt. Zero. When you combine an absolute monopoly on a vital resource with a zero-debt balance sheet, you get incredible safety. They are a true income titan, completely insulated from the financial pressures that tend to crush lesser companies.
Because of that dominant debt-free position, Coal India is able to hand out a staggering 6 to 7% dividend yield consistently. Just think about that percentage for a second. When you're trying to realize a dream of earning $50,000 a month purely in passive income, a 6% to 7% yield from a debt-free monopoly is a massive, heavy contributor to making that math work in your favor.
Section 3. The financial powerhouse, the final pillar.
We are almost there. We've covered consumer goods, utilities, tech, and energy. So, our fifth and final stock is the financial powerhouse REC Limited. This is a massive financial institution playing a hugely critical role right now by funding India's massive power infrastructure. What makes REC Limited so compelling is their forward-looking mandate. Not only are they funding traditional power, but they are also heavily funding the renewable green energy transition. They occupy this super unique space, bridging the gap between steady, reliable public sector backing and very sharp, effective commercial execution. For long-term holders looking for passive income, this unique setup rewards you with a highly reliable 5% to 6% yield.
Section 4. Avoiding the yield trap, the golden rule of dividends.
Now, before you rush out to build this, the sources highlight a major word of caution. You absolutely cannot chase a stock blindly just because it shows a high dividend yield today. So the crucial point is understanding the difference between a healthy yield and a trap. A structurally safe, healthy dividend comes from a company with rising free cash flows and a low debt-to-equity ratio, exactly like the ones we've just discussed. Conversely, an artificial trap is a high yield built on a dying business model or a company that's drowning in debt. Sometimes a yield looks artificially high just because the stock price has completely collapsed due to terrible fundamentals. The research suggests always prioritizing fundamental safety over a flashy short-term percentage.
Section 5. Your balanced portfolio. Achieving the 50K dream.
But listen, if you stick to fundamentally unbreakable companies, that 50,000 rupee dream becomes a very achievable reality. By combining these 5 structural players, you have a beautifully balanced portfolio equally distributed across consumer goods, tech, utilities, finance, and energy. This exact diversification is what insulates your lifestyle from sudden market shocks in any single industry. You aren't relying on just one sector to pay your bills. You literally have the titans of the entire economy working together to deposit cash into your account, purely and consistently. It is just an incredibly powerful way to build lasting wealth without the daily stress of the markets. So, I want to leave you with this question to chew on today. Which of these structural players do you already hold in your DMAT account? Take a look at your own portfolio, think about your passive income goals, and consider how a structured, dividend-focused strategy could start paying your bills for you. Thank you so much for hanging out with me for this explainer, and here's to building your passive income journey.